So let's get over to see what the Federal Reserve is expected to do at this week's meeting. So let's look at a lot of the data points that they look at, because we had all these factors come in last week, and this is going to make basically help the Federal Reserve make the decision on what they're going to do. So let's get over to it. Right through here, here's the data that came in last week. We had actually each piece of this information come in. We had the PCE, the number one inflation number that the Federal Reserve monitors. We had the unemployment rate come in, and we had also GDP basically fall off a cliff last week. And the biggest news we have right now is, well, is this going to signal the Federal Reserve to cut rates, or is it signaling more of a recession on the horizon? So we're going to talk about what a recession is, how that affects real estate here in a minute. But let's go over to the stock market. Equity markets are taking it on its chin all the way across the board here. We do have oil down, so that's helping on the inflation front tremendously. But we do have the 10-year Treasury up 0.008. I'm not going to say that's really a move in rates. So let's get over to what the bond market's doing now. So here's what the bond market's doing. If you want to follow interest rates or mortgage rates, you have to follow the MBS market that we follow right through here. So let me explain to you guys what this is and how this works. So what we follow on this channel, if you're trying to figure out what's going on with mortgage rates, we follow these things right through here. This is a mortgage-backed security bond. It's a mortgage bond that trades on Wall Street. The yields on this thing is exactly what your mortgage rate's going to be, other than two other components. What's added to this yield is what we call loan level price adjustments and also the bank's profit margins. So that's what equates out to your mortgage rate. So here's what we're seeing in the board right now. We have a negative 0.08. So when the bond market is down, which you're seeing right through here, the price of the bond is down, we see rates going up. Well, the other day, let's look at a 2-day chart. This is a pretty bad chart that we're seeing right through here. Here's a 5-day chart. Well, this, if you went about 6 or 7 days over there, we had a rally. It was way down here and then rallied all the way up to here. So now is this our focal point to get, basically start locking people in? Because as this chart goes down, rates are going up. So I'm still not convinced that this rally is over. So, the market's down 0.08 right now. I'm going to try to get, is this a consolidation point right through here to now have an uptick or a downtick? That's what I'm going to focus in on. And that's why you need to stay tuned every day to figure out what's going on with mortgage rates and the whys behind it. So that's what we're seeing right through here. We go to the economic calendar for this week, and there's really nothing here. We go to Monday, the servicing PMI, really nothing here that's going to spark the market. Tuesday, we're going to check the 10-year bond yields, and the auction's going to take place. We're going to see how the yields go on that. And then on Wednesday, we have the FOMC meeting. They're going to come out and tell us exactly what they're going to do. So what are they going to do? Let's get over to it. Let me break the bad news to you. I'm going to go over to right through here. Let's scroll down. What's the probability of what the Federal Reserve is going to do at the next meeting? Well, I hate to burst your bubble. If you go down through here, there's a 96.9% chance they're not going to do anything, because the federal funds rate right now is 4.25 to 4.5 right through here.